Hi everyone, welcome back. And today I just want to make a video that is a little different from my normal kind of content. Today I actually just wanted to talk about investing. The reason being is Chipotle had their stock split today from being a 50-1. So that means that if you own a one stock of Chipotle, you will get 50 shares of the new stock split. Right now, per shares was not right now, but before the stock split, shares were hovering around over $3,000. After the stock split of 50-1, it's around $64 if you wanted to purchase this one. Disclaimer, I'm not a financial advisor. All I can tell you is everything I've researched, what I watched, what I learned about on my own, and just give you my best perspective as I got into really investing toward the late 2019s to 2020, especially during when COVID hit, and just learning about that. I really jumped into it when Apple and Tesla both did their stock split and buying shares when the price finally went down. There's some people who could say, well, why wouldn't you buy them before so you could get more shares? Sometimes the threshold is too high for people that people like just couldn't afford one share even. But when they do the stock split, it allows more stocks to be available, more people to be buying. Again, I'm not a financial advisor, so I can't speak. People have their pros and cons of buying it before or after the stock split. I usually buy after the stock split. I'm not a very savvy investor. I don't invest much. I know there was that craze with Robinhood and then the GameStop. And then AMC. I jumped on that a little bit as well. But a lot of my investments has been when stock splits have happened from Apple, Tesla, Walmart, and then I have bought some stocks that I knew about companies. My mindset is, and again, I am not a financial advisor. People most likely will go at it on the comments saying that I don't know what I'm talking about. All I can talk about is my perspective and my understanding is I see it if you have like a emergency funds established and you have money saved in just in case something does happen, then it doesn't make sense for you to have your money in the savings when you have the emergency funds established. You should have your money working for you, especially with compound interest along those lines and stuff. If you have a 401k, great. If especially with your employer, if they're matching it, that's something awesome. But along those lines, you definitely should have. And others would say maybe go into real estate, invest into that. I'm not saying that is wrong. I think that is something. But again, the threshold could be high, especially if you're limited on the income you have. But if you do have some money sparingly, and you don't want just sitting in your savings, if you can control your consuming money wise, right? And avoid materialistic things at the moment, then it is a good idea to put that money to work for you. And I feel like investing is that. I don't do, the people I've talked about penny stocks, people I've talked about daily trading along those lines of that. I don't do that. The ones I feel safe bet on is the ones that I know about. I've seen where their current stock prices and seeing that, after the stock split, I can see that money jumping back up. I'm going to use Walmart, for example. When I was working at Walmart after I separated from the United States Air Force, I remember their stock and I let those sadly go. I was a Walmart employee. I bought into it and they took portions out of my paycheck and I was able to buy Walmart stock. And I saw that it was around, this was like in like 2017, 18, right, time. So the stock was at, I think, $70, $80. When I heard about Walmart stock splitting in 2014, the stock had jumped to about 180. Again, these numbers are just being like rough estimates from what I remember. And pretty much that's not a bad return over 5 or 6 years. I know people might argue about that and say, no, you could do better. If your money was just put in there, let's say you put in the 70 and jumps up to 180 and you bought like 10 stocks. Again, that I know it doesn't sound a lot to people who are trying to make that big money. And again, I think people would say, oh, Anthony, you don't know what you're talking about. You're thinking too small, which I respect and I understand what you're all saying along those lines. But that's my mindset is I rather put my money into something that is working for me along those lines. And with stock splits, I would suggest people doing that if they're especially hesitant. In my opinion, and again, don't take my advice, and I'm not 100% certifying it, saying I'm a financial expert, is those ones I feel are safe bets. I see them rising back to where they were or close to where they were, right? My Apple and Tesla have rebounded to the point where my initial investment, I've already made some money and stuff along those lines. Other investments I have done is I went through a brokerage through one of my credit unions, and they had a financial services that was available. That one I could maybe see why some people wouldn't want to do it, but pretty much they invest into stocks of different ones, and pretty much you expect a certain return. They tell you how much you're expecting return, and then of course you have to pay a fee each year for using that services. And then I have opened, that one is a traditional IRA. I'm not even going to go into that stuff, I'll mention. And then I have also established through Charles Schwab, right, a Roth IRA. So two different kinds. And initially when I had the sparingly money, I did put the max investment into the Roth IRA. Again, this was like in 2020, 2021. And pretty much it's just, what you're allowed to at the years of how much you can put into those ones. And then I invested in different aspects. I'll just tell simply, yes, my money has been returning decently, nothing like crazy. Apple pays the dividends each year, nothing crazy. I don't have enough stock in that. But I think overall, I'm happy with where I'm starting with investment wise, and just being able to spread it out across different platforms and different streams as well. I try to encourage people with these kind of stock splits. If you're hesitant, if you initially look at it and potentially understand that there might be a rebound and go back to close to what the stock was before it was split, then I think your money is good return wise. But of course, you have to factor in inflation and those ideas of how much you initially invested to how much it is actually worth today. And along those lines, I completely understand that. All I can talk about is the simplest of ideas. And I really want to talk about this when you saw like Chipotle, for example, or even Apple or Tesla at the time. The stock initially before the splits were so high that people, unless you had that kind of large cash money or assets wise, be able to buy into that stuff. And with the stock splits, it allows you to do that. There were some that I missed. Like I wish I had maybe bought Nintendo. All of them are not going to be returned, right? I bought into like McDonald's, Coca-Cola, and then Boeing and Starbucks. But I did that because I knew those brands, and I thought they were like, okay, well, I had some extra sparingly cash, put it in and see it. And those ones, of course, haven't been the biggest returns on there. The stock split ones have been the biggest returns. But then there are some companies people have been jumping on. And again, I'm not an expert on it, but I know some people have been jumping on those companies that have been like rebound really quickly, and people say stock split, and sometimes a stock split does affect a company negatively sometimes, who knows. But I've tried to place and do my research and put my faith in ones that I feel like would rebound well and their stock prices will climb back up. But that's all I can say. I just want to talk about this. I never got into investing during my time in the United States Air Force. I knew a little bit about it, but didn't really jump into it. And I kind of tapered off a little bit, just been focusing on ones that sounds good, reasonable returns and putting there. But this has been my last stock split since the one I bought through Walmart this year. And it's kind of tapered off since my time in like when I was buying in 2020, 2021. But I am being on the lookout of big stock splits that are coming out. And I'll definitely make more videos, or at least just share them on social media, on my YouTube, Instagram and stuff if you're interested. Again, I'm not a financial expert. I can give you a bright perspective. I'm not trying to give you financial advice. I can only tell you what I've been doing and what my mindset is and how I look at stocks and along those lines. But my biggest thing I can always just share is make your money work for you in some kind of sense. That's all I can say. As prices are constantly going up, inflation wise, I think I wish I had started investing in my young 20s, even younger if potentially, instead of just buying materialistic things, or how my parents taught me of savings, right? If you have established emergency funds, if you have the extra money and you're good and not have some self-control on spending, I definitely think you should look into stocks. I wouldn't say, I would say real estate would be great too, but if you don't have that kind of threshold money to invest into those areas, definitely look into that as well. As always, take care. I know a different video and pretty long video. I'm glad I made this. Hopefully it does decently. As always, go Thorough Prince. Let's go.